In this video, I want to introduce a valuable volume indicator that I found on TradingView platform. To add this amazing indicator to our chart, here we click on indicators and we search volume buoyancy. This one, which is written by someone named Loose F. Alright, this is the indicator, and as you can see, it's added here below the chart. This indicator analyzes past volume data and measures the strength and direction of market sentiment. This indicator uses the term buoyancy, which is a concept in physics, but here in this context as volume buoyancy that can be directed up and down depending on the past volume data, and this indicator tries to give an insight on the strength and direction of the market activity by analyzing the past volume. I don't get into more details regarding the calculations behind this indicator. You can check the page of this indicator on TradingView. The author has explained all the details. The code is also available there, so you can more investigate if you're familiar with point code scripting. Alright, now let's see what are the components of this indicator and how we interpret this indicator and use it for trading. This gray line that you see here is buoyancy line, and by default it's calculated based on Arnold-Legox moving average, which is the best choice for the context of this indicator, and the target bars for averaging is set at 20. Please pay attention that similar to moving averages, if we decrease the target bars, our buoyancy line will become more noisy, and if we increase the target bars, the buoyancy line will become smoother. For general use cases, the default setting of 20 works well, but depending on the trading strategy, you may need to increase or decrease the sensitivity of the buoyancy line. We have also a moving average of the buoyancy line with length of 20, which is not activated by default, but even when not activated, we can still follow it because the channel between buoyancy line and its moving average line is filled with different types of colors. Alright, as you can see, we have a center line here which is 0, and it's an important level here in this indicator. When the buoyancy line, the gray line, is above 0, it shows we have higher interest for buying, so greater upside momentum, and when it's below 0, it shows higher interest for selling and so greater downside momentum. As you probably guessed by now, when it crosses above 0 or below 0, it can give us a signal on the changes that are happening in the market sentiment. Because buoyancy line is a little bit noisy, you may see several crosses near center line, so for this purpose we use its moving average line, which is smoother and moving without any noise. If you pay attention, you can see that the moving average line changes color based on center line crossing. When it's above 0, it's yellow, and when it's below 0, it's in red color. So when this moving average line crosses the center line, it tells us that the market sentiment is changing. When it crosses above the center line, it shows bullish sentiment, and when it crosses below the center line, it shows bearish sentiment. Like any other indicators, a center line crossover here is a little late signal but a more reliable signal, and they usually happen when the advancing of the price or declining of the price are somehow established. To get earlier signals on the changes that are happening in the market sentiment, we can use the crossover of the buoyancy line and its moving average line. When buoyancy line is above its moving average line, the channel between them becomes green and it shows bullish sentiment and advancing of the price, and when buoyancy line goes below its moving average line, it shows bearish sentiment and so declining of the price. Here you can see that when buoyancy line crosses above its moving average line, it's a much earlier signal in compared to the center line crossover. And also here you can see that buoyancy line crossed below its moving average line here, giving us the signal that the prior advancing of the price is weakening and we're gonna have declining of the price, and in this case you can see that the center line crossover happened here. But you must pay attention to an important point here, that relying on these crossovers are a little bit risky because you can encounter false signals before the direction is established, or in other times when the trend is strong and extended, you may continuously get these signals on each pullback or short pause that is happening in the market. So center line crossovers are safer signals, and please pay attention that this indicator is not a buy sell signal indicator but a perfect indicator to confirm the buy sell signals that you get from other indicators or your trading strategies. This indicator analyzes volume data to measure the strength and direction of the market sentiment, and this volume based insight is a valuable information that you can use for confirmations in your trading strategies. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.